Hey everybody, welcome to the morning market briefing. It is Monday, March 16th, 2026. Happy St. Patrick's Day Eve to those who observe it. Ben, Tom, how we doing?
Feeling good. I wore yellow because if you're familiar with the Roy G. Biv, yellow comes before
right
green.
Before it, yeah.
So
I'm in a tough spot. My wife's birthday is on St. Patrick's Day, and we're going out for dinner tomorrow night. I don't own any, I guess, like a similar attire to what Ben has on right now, like a button-up. I do not own a single button-up that has green. And
well, the good news is it seems like people have been celebrating St. Patrick's Day for the last week.
Yeah.
So the good news is maybe on the actual day.
Yeah, the casuals
I'm just
probably hungover today.
I'm just like super paranoid about having like a nice meal, getting to the dessert and waiter comes up and just pinches me. It's gonna be tough.
Well, I'd say stay out of Midtown.
As a reminder, check out the Jacobs Ladder Group. We have an event coming up. That's 2 weeks out?
Mm-hmm.
On April 1st at 12:30. Come by for a free lunch and also to learn more about the Jacobs Ladder Group, or check out jacobsladdergroup.org. We'd appreciate you following that organization and showing them some love. Ben, Meta, making the move. Big layoffs coming out.
Yeah, 20% of the workforce, according to Reuters, could affect about 15,000 employees. They have about 79,000 employees currently. It would be the largest layoff since the article said since late 2022 when they cut 11,000 jobs.
Yeah, this is much more.
So I would say this is the biggest layoff ever potentially.
But also the biggest since 2022.
Yes. Zuckerberg had previously said, and we talked about this at the time, about how productivity among engineers is up 30% on a year-over-year basis, and people who actually use AI more have seen increases greater than 80%. So when you have those types of productivity, either you need to be producing a lot more stuff and becoming much bigger, and that's kind of on the managers being creative and deploying those resources into growing that pie more, because if you can't grow the pie faster, then you don't need as many employees to service the pie that you do have. And that's one thing I would say, a lot of people are talking about entry-level jobs, and we work with a number of clients who are trying to find the first job or seeing, is this first job the place where I need to be for a long time? And this is exactly something that you need to be thinking about. Do you work at a company where they can grow the pie so that when you're becoming more productive, that pie grows as well? So by which I mean you're able to be 50% productive, but that's not at the expense of Joe down the street.
Yep.
Or Joe in the office next door. You're actually 50% more productive, and because of that, you can do a lot more. And we're talking a lot about that internally. Is our goal, if we can get 30 or 50% more productivity on a lot of these kind of day-to-day tasks, think trading, think a lot of these, even some of the kind of the research gathering processes that can be time-consuming. If we can be more productive on that, then what are we going to do with that time? Because if we're not growing, then we don't need as many employees. We're not going to fire people, because what the idea of what we're trying to do is we want to give people more time to meet with clients, grow the firm, think creatively about what we can do next. And you want to be working at a company that does that.
A wise man once said, boss makes a dollar, I make a dime, and that's why I poop on company time. But if you're a guy who's making 75 cents and the boss is making $1, you're about to get the axe. You're going to have to do that on your own time now, I think is what Ben's trying to say.
Yeah, I think Ben was talking about poop as well. I will say, I mean, there is an element of, there's a challenge there. I mean, even just thinking introspectively about our firm, if we flipped a switch and everyone in the office came up and said, hey, Andrew, I now have 20 extra hours a week, how do I fill them most productively? There's plenty of things that we can always do more of, the things that you just kind of alluded to, Ben, more FaceTime with clients, higher level of service, all those things. But quantifying that and detailing that and figuring out, do I need everyone doing that, or do I need some people doing this, not that? I think it's going to be an interesting period as we talk a lot about leadership of companies, particularly in the C-suite. I think this is going to be an interesting period to really study like upper middle managers. How are they delegating and what are they coming up with? Because the reality is Zuckerberg is not figuring out what to do with employees with excess capacity. People several rungs below him are.
Mm-hmm.
And I think that's going to be, I think there's going to be some fascinating case studies to come out of that.
This is when, I mean, there's been so much talk about how many times have we heard about culture over the last decade or decade and a half. This is when culture really hits the skid, so to speak.
Yep.
You know, this is when the companies with the true good cultures, the ones that, you know, elevate people, those are the ones with where, you know, it metastasizes to the upper middle management and they get it.
Mm-hmm.
And when they get it, they can really elevate the organization.
Do they still do that 20% thing at Google? Because that used to be
don't.
like a big thing in the 90s where it was like, or I guess late 90s. They're like, Google was like, we encourage you to spend 20% of your time just goofing off and maybe working on something
just
else.
thinking about something.
Yeah.
Yeah, I think that
Those
changed
people are
a little
definitely
bit.
gone
Yeah.
now, yeah.
Yeah, you got to be googly. I mean, they made a whole movie about it.
Yeah.
The Nebius investment, $27 billion on a 5-year AI compute contract.
It's smart from Meta, I think. So basically what Nebius is doing is they're building out all the compute capacity. They have the burden of responsibility there, and then Meta says, okay, we'll give you $27 billion over 5 years. So Meta is being very capital efficient with that, which is what the market likes to see. So on one hand, this is one of the reasons that we own Meta stock, is that they're cutting expenses, they're being more efficient, and they're doing less on the capital investment side themselves. So two things, you see the excess exodus of cash that was so maligned from Meta because they were spending so much money on this AI compute capacity. Well, now you're seeing them save money on employees and reduce the amount of money that they're actually having to shell out up front for compute capacity.
Solid moves. Private credit world, Tom, Cliffwater, Wall Street Journal reporting about their black boxes.
I mean, they're just coming up with more and more ways to obfuscate what they have and where it is. So I would say I would continue to be very hesitant. If you have assets in this space, I mean, I would guess it would apply to get out of the gate. A lot of these things are getting capped. You know, get in line and hope that you can get some money back. I just don't know what the end game is here, but I still would maintain I'm not really worried about the defaults. The defaults piece, you should consider if you're investing in sub-investment grade debt, especially stuff that is non-regulated, it's just out there. Private credit. If I lend $10 to Ben, you know, I've got some expectation that Ben is not Google and I'm not going to get my money back. And that's basically what you're thinking here. So you should expect defaults, and probably higher than the 10% range, because that's, you know, 3 to 5% is what you should think in normal triple B corporates. So once you go down through the bottom of triple C and into the unknown, that part doesn't really worry me. But the problem is you can't get rid of this stuff, and everyone is trying to get out of it all at once. And we're seeing the air coming out of this balloon really fast, and whether or not these are good loans is really irrelevant at this point. I mean,
it's a bank run.
It's a bank run, yeah. It's same with Silicon Valley. I mean, it was like those are AAA securities. They lost a lot of value. There was no home for them for anywhere, and you're gone. And that's what's happening. Cliffwater, it's happening to a lesser degree with, you know, BlackRock, and Blackstone for that matter, and Apollo. All these big names are probably going to be fine, but you start getting into the Cliffwaters of the world, you start getting into some of the private deals that are between people that you might know. I mean, things are falling apart pretty quickly. There's no way to get your money out.
It's wild to me how Apollo is trying to be so holier than thou right now.
Yeah.
Like, you know what? I can't believe people would have invested in these products. I'm like,
yeah, you're the premier purveyor of these products.
You bought an annuity company so that they could invest.
You could
in your
force
products.
people into them. You could create them and then sell them to yourself.
But good for them. I mean,
and charge a nice hefty fee.
Yeah. I mean, it is interesting that it just seems like we are very much in that news cycle where every day there's another report on this.
Mm-hmm.
And not saying the boys were right, but
Certainly looking that way. At this
certainly
point.
looking that way at this moment. Tariff refunds, trying to figure out how to get $160 some odd billion.
Yeah, there was a Wall Street Journal article on this today. Just the judge presiding over it, kind of a piece on him. They just need to figure out how to distribute it. They want it done ASAP, but they don't really know how to do it. So that's kind of what's going on in the background. Trump truthed about the tariff, saying this was the worst court case. I mean, he went on a tear. We'll talk maybe a little bit of that in a minute, but he went on a truth. I mean, we've seen some long tweets by some other people, including Bill Ackman, but his truths.
He's writing books now.
I don't know how he's. Can you imagine? Because he doesn't type this out himself. We've seen how he does it. He dictates it. Imagine the number of actually go back and hit an exclamation point there. All caps.
Yeah, we got to capitalize. Great. Yeah, I mean he's definitely been on a roll over the weekend. New York City estate tax. Mamdani wanting to lower the estate tax threshold from $7 million down to $750,000 and raise the top tax bracket from 16% to 50%. I mean, this is a pretty staggering impact, I would argue, for a lot of people.
I think that people who voted for Mamdani are now realizing that his definition of tax the rich is a much lower threshold than people thought, because so it basically was, if you died, anything above $7 million in assets that you're passing to your family would be taxed at it basically started at 3%, and the higher you got above that would be capped out at 16%. And so, you basically want to get your estate lower and lower to avoid those taxes. But if you got $50 million, it's really not that big of a deal. But he wants to drop that to somewhere. The headline keeps saying 750, but the actual verbiage in the documents is 250 to 750,000. So if you're a 65-year-old person and you've worked your entire life,
and you have $500,000.
Yeah, if you own a home, even if you haven't paid it off, and you have a couple
$100,000
apartment
in Manhattan.
Yeah, if you even have a couple $100,000 in stocks and bonds that you accumulated over a lifetime, you're now looking at 50% of that going to New York State, let alone the federal government. Though you would be, you'd be fine at the federal, yeah.
Which is part of what's so crazy to me. Sorry, what's so wild to me is that this is so much more aggressive than the federal taxation.
The plan of this is to force people out of their properties, because there's basically not a single property on that island that's worth less than $750,000. This is a function of supply and demand and how many apartments have been built in New York in the last 50 years. I mean, there's a massive shortage. It forces people out. It forces that money into the government's hands, and then they can redistribute that how they please. And it's ridiculously punitive.
I mean, think of living kind of in one of these increasingly more gentrified areas, maybe in like Harlem or kind of on the edge of Manhattan, or Brooklyn for that matter, where now the prices have gone up so much, and now it's been in the family for years. This has been a 1 or 2 bedroom apartment that you're paying property tax on, a lot of property tax, and now you're going to inherit that's worth $1.5 to $2 million, and you got to come up with a $750,000 check when you might inherit maybe $50,000 in cash. Like in many instances, like these kind of people who've kind of worked their way into New York City life, the exact people whom Mamdani would be trying to help, they're going to be forced out of their homes because they can't come up with the cash to pay the estate tax on the property.
Yeah, I mean, you say as a 2-bedroom apartment's $1.5 million, like you'd be on the hook for $250,000, and you didn't get any cash. All you did was inherit a tax bill. So then you sell that, the government gets a big chunk of it, and then you've got cash, but you can't turn around and buy a new apartment.
And the reality is, I think maybe for some people, it's easy, I think, to get bogged out on like New York real estate. Man, there's an awful lot of people pretend this was in Marietta, Georgia. There's an awful lot of people that have $750,000 of net worth.
Yeah.
There's an awful lot.
Yeah, if you have a $300,000 house
Yeah.
and you have $300,000 in savings from your career and you're retired, like you'd be right there on the edge, even if you were 80 years old. You know, I mean, the function of one, the market's being very strong, and two, inflation is people have more dollars, and if we continue to get inflation, then that ceiling will stay the same. You know, so it's like, oh, $100,000 used to be a lot of money. Well, then $1 million eventually is not going to be that much money because we had such strong inflation, and then everyone's going to be subject to a 50% tax at death in New York, and they've already just been hemorrhaging tax revenue. I mean, we saw them get downgraded last year. It's not going to get better. There's a great tweet thread that was going viral this weekend that was talking about the number of millionaires that have exited New York City is in the millions. Like there's millions and millions of people who were, you know, a millionaire in New York is really not that much because you got to make $500,000 to live there comfortably. And those people are moving to Florida, and there's been a huge increase in Florida in tax revenue, even though they don't have nearly the taxes, because those people are moving there. They're taking their network, they're taking their philanthropy, they're taking their ability to create jobs, and they're going to places like Florida and Texas. And so what used to be the cheap bonds, Florida and Texas, because there's no state income tax and there's no natural demand, those are getting expensive because they're such high quality. There's so much cash flow, and New York is on its way out.
Well, think about it this way. If you are, you know, older and you don't want to saddle your descendants with a ton of taxes, what is the incentive for you? Like what your incentive is to sell your property, do a 1031 exchange,
And go out of state.
and go over to Newark.
Move to Alabama.
Yeah.
You know, find the most like less populated. I mean, you could sell your $1 million apartment in New York, and for $1 million, you could buy the nicest house in Birmingham.
Mm-hmm.
I mean,
but even like and even like staying in the city. I mean, that's the thing that people keep forgetting about New York City is that it takes as long to commute from Brooklyn as it does from Jersey City. It's like why are you staying in the city? They call it, you know, the substitution effect.
Yep.
Connecticut, New Jersey,
Yeah.
right there.
yeah. I mean, it's just absurd, and it's so confiscatory. You know, I mean, they're trying to force people out, and then they're going to the government's going to buy those. They're going to come in with eminent domain and have first right of refusal on these properties, and they're just going to pack them full of people on rent control, and that city is just going to ultimately collapse because those people don't generate tax revenue. And that's the long short of it. You're taking people's money, and then you're throwing pine straw on the fire. Sure, it burns really bright for 30 seconds, and it looks cool, and everyone's like, "Whoa!" But then there's nothing there, and it goes out.
Good analogy.
Yeah.
It resonates. Let's talk Trump. He was really truthing up a storm. But he offered up that Iran wants a ceasefire. They want a truce. They want a deal, but Trump says it's not good enough. Unsurprisingly, Iran says that they don't want that. Iran's continuing to maintain the position of, well, we were just talking to them, and then they attacked us. And so that's the line they're playing. What stood out from the many volumes of Trump truths over the weekend, Ben?
I think there's so much about it. My opinion on the situation is Trump realizes that he doesn't have the cards right now, as certainly that he did, and he's trying to beat around it with messaging. I think that for now he's on the defense, and I think that that's why you're seeing a negative correlation with how well he's doing and the amount of words that he's writing. Having said that, I would also say that I think that Iran doesn't have the cards. I think that it's just a quagmire right now, and I think that the U.S. is looking more likely that we'll get control of the Strait of Hormuz at some point. But I think that we're relying now on international partners to come in and help. I think that we'll end up having to see. I think that we are having conversations with the Iranians, but I think they're through back channels, and I think there's plausible deniability from the Iranians that those are actually taking place. And I think that Trump is probably not wrong in saying that Iran does want a truce. I think the U.S. also wants a truce, but neither of them will say that directly. But I think that's happening through back channels. I think there's many ways to talk about the same things that are happening that color each side favorably. But I think at the end of the day, both sides ultimately want this resolved, and I think we need it resolved. I don't know how quickly that's going to happen, though. People keep talking about end of the month as Strait of Hormuz, but I don't know if the oil markets can take another 2 weeks of this.
Yeah.
Did you see Newt Gingrich was talking about nuking a canal around the Strait of Hormuz?
I mean, that was kind of my idea on Friday. I was like, why are I don't understand why there's this little pinpoint that why aren't we just blowing it up?
Just creating new oceans? I don't know.
It seems like that'd be.
Speaking of back channels, there's a wild article in the New York Post this morning about the potential personal issues that Majtoba Khomeini has that might disqualify him from leading Iran.
Uh-oh.
So I'll let you guys Google it. It was a real shock to me, and apparently it made the headline says that it made Donald Trump laugh out loud.
Ooh,
so
man.
I'll let you guys Google that.
I got on some deep, dark trails of weird, borderline conspiracy-ish theories of the war. And one of them, I got real into the Tucker Carlson thing, where supposedly he was in communication with Iran. He's saying he was framed. And I read, I think Ackman reposted somebody talking about how Trump just played Tucker like a fiddle and, all of this stuff. And I really was amused by it, and specifically amused by the fact that somebody spent an awful lot of time typing out this thing that really has no fact tied to it at this juncture.
Did you see the
and
SNL
I spent
guy?
even more time reading it.
Did the SNL guy do the Tucker impression on the on Weekend Update?
No.
It's very good. I was like, man, this guy, he doesn't really look the part, but man, the voice is very funny.
Does he nail the laugh?
Yeah, he does the laugh, but he's just like, what about that?
This week, we'll get the Empire Manufacturing reading actually out this morning. Get a 20-year auction. NVIDIA has an investor day on Tuesday. We'll get a couple earnings trickling through from the likes of Lululemon and others. What's top of mind, Tom?
I mean, the 20-year would be interesting. We've seen some real whipsaw action on the bond market. I mean, as late as yesterday, we were looking like we were going to open right around a 430 on the 10-year. That's already crashed back down to 423. I was kind of hoping we'd stay there. I mean, that's pretty opportunistic. I think we were pretty sold off at that point. But, I mean, the 20-year is the redheaded stepchild of the bond market, so it could probably push the market one way or the other, depending on how strong or weak it is this week. So we'll see.
Hicks, did you get any gas this weekend? Let's get a gas report. No, still good. Still riding on that.
It's going to be a tough week for the boys, though. Yeah. He's been holding it all weekend.
Yeah, we are about to get crop dusted. I got gas over the weekend, no problem. I mean, it was not the cheapest in the world, but
I'd say it's come back down a little bit.
Yeah, but certainly no shortage at this moment.
Yeah.
So the panicans out there have, I guess, already filled up their tanks. Ben, what's on the list for the week?
The NVIDIA Investor Day tomorrow, I think it will be key, especially for a lot of the AI. I think a lot of people think that this is the last great last great year for NVIDIA. And then we have so many meetings this week. We have the Fed meeting on Wednesday, followed by a triple header on Thursday morning in Europe. ECB, Bank of England, and the Swiss National Bank. Let's go. Will they cut rates from 0.15% to 0?
Full of holes, the Swiss.
We will find out. All right. Good stuff. We'll wrap it up there. Talk to you guys tomorrow. Have a great day.